come with 30% chance of recession, 60 nonsense. Okay, so let me give you the information.
Mm-hmm.
Recession starts if there's an inverted yield curve, which means it's the 2-year note against a 10-year note has a higher yield. The recession never starts when the 2-year yield is higher than the 10-year yield. The recession starts when it's going back to zero or above zero. Now, that has been true about every recession of the last 60 years.
Mm-hmm.
People just don't study it. So right now, we're not in recession, the 2-year.
Right.
Still having a higher yield than a 10-year when it comes around the recession, and that has been in 100 cases. So can you say it's going to happen again? Well, is there anything better? No, you don't know anything better. So let's assume that. Nobody tells you that because nobody understands. People listen to them. They don't know what it means. What it means is
the Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, we've got Charles Nenner on with us today, giving us some insight into where these markets are heading. Highly recommend you go over to Charles Nenner, that's NENNER.com. Sign up for his trial subscription. Been a subscriber for years. It's something I start most days. Whenever there's an update, whatever I'm doing, Charles, I put everything aside and read it to see what the heck's going on. We're talking pre-call. AI, biggest threat to Wall Street that has ever existed, because basically, what do you need a portfolio manager for? What do you need an analyst for? Stockbroker, whatever. You just get yourself an AI bot and they are your portfolio manager. Where do you think this trend's heading?
Well, as you maybe remember, I went to this business in the mid-80s after I finished being a medical doctor. It was only for a couple of years, and I thought going back to medicine, it never happened. So I developed this intelligence and what I call neural networks. And except of clients, most people didn't take it seriously. And the interesting thing is, they still don't take it seriously. So I think I'm against up like the thousands of brokers with gray suits and attaché cases who say whatever they want and ever they quote whatever paper they see, and they just try to suppress the artificial intelligence in financial markets. So I'm fine with that. I just find it surprising that this exists already for a long time and also now, and it doesn't get to the surface. That there are computers who can calculate things that we cannot, mostly because they are not emotional. So it's like it will take still many years because people, and I still have clients who say, why do you think it's going to happen? And it says, I don't deal with why it's going to happen. I deal with what happens. So one example.
We don't deal with whys.
So one example is with a lot of hedge funds that everybody's afraid for the black swan crash. You know, the black swan theory says there are situations that we cannot predict. They're going to bring down the market. So they all try to predict why it happens. And I try to convince them, why don't you deal with me when it happens? Who cares why it happens? But there's so much conditioned in why it happened, they cannot forget why it happened. They're all busy with why it happened, not when it happens. So it's still early in the game.
So, but at some point, look, it's just like they play chess, they play that game Go, and they far exceed human capabilities to the point where when you have two computers playing Go against each other, the game becomes unrecognizable. The big guys out there, the big algo players, all of them, are they using AI?
Well, they use my research, which is based on AI, and since they're very much into results, they really don't care why it happens, what happens, who says what, and who does what. They just want to know what to do is, does it go up? How many days it goes up? How many weeks it goes up? How much percent it goes up and how much it goes down? But if I may say, the little investor who doesn't really study history of financial markets is still listening to the media. And I have to say this, the funny thing of the media is, how did I get in this finance? I was in New York on vacation and I saw CNBC. And CNBC said, well, I remember Ford stock goes up, Ford goes down, all kinds of reasons. That's strange, it can't happen. So that's how I started my career. And 20 years later, when I was invited to a lot on CBC, he says, how do you get in the business? And I thought it would throw me out. I said, you know what? I was listening to you guys, and I think this is nonsense. Let me check it. And now you invite me to explain to you what I checked out.
Mm-hmm. And so you're really making sense of things. It's just kind of your nature. And so what tools are available to the average person now that can really help you, besides your research? What else can I use to help me outperform the market and stay away from crashes?
Well, the first problem is that you will be listening to the media.
Yeah.
And like Warren Buffett said, I never saw a journalist who became a billionaire. Something,
Yeah.
otherwise they would all, go into business if they knew that. So I have been on television on Bloomberg TV, and I always like these people. But if you know who sits there and writes the stories, right, that 19, 20, 21 years old students.
Yeah.
That just write up a story and then it says Bloomberg says, or the whatever says. So it's kind of a hopeless situation. People want, I don't say they want to be fooled, but it's still fooled, and they don't feel they're being fooled.
Yeah. Well, so if I could sum it up, the problem is they're way more concerned about why than when.
Right.
And it's like, there's a lot, I don't need to understand my car when I put the key in the ignition and turn it. All I need to know is that it's running and it'll take me where I need to go. As far as something goes wrong or how it works, we'll leave it to the engineers and the mechanics to figure all that stuff out. I just want it to take me from point A to point B. And so basically the emphasis, the focus of the average investor is completely in the wrong arena. They're trying to figure out why when they should be trying to figure out how much I can make or lose if I'm right.
And then they have the illusion. If I say, we think corn goes up a lot, just to give an example. This is, well, I don't know about corn. I says, what do you know about gold? You play gold, you don't know anything about gold. Actually, nobody knows anything about gold. So it's built on an illusion. But billions and billions, $100 billion go on every year based on this illusion that they keep going.
Yeah. Yeah. Well, that's what makes the world go round, I guess, and costs people a lot of money and a lot of heartache and a lot of grief. So looking at markets ahead, stock market. So it performed unbelievably well so far in 2023, better than most of the so-called experts out there were predicting. But now it looks like we've come to a bump in the road, doesn't it?
Well, let me just say, if you take out the Magnificent Seven,
Yeah, those 7 stocks are responsible for like the whole thing.
For that, what it was. Yeah, so we're not up that much. We sold the market.
Yeah. Mm-hmm.
Right at our downside price target, which is P4450 and NASDAQ 15,000. We cover here a little bit the shorts, and cycles are down. If we see a substantial close below these levels or much lower, so we know this in a couple of days.
Okay, so we're heading lower there, huh? So it would appear.
Now, I want to mention something that you probably won't hear. You hear a lot about we're going to be a recession, and the bonds come with 30% chance of recession, 60 nonsense. Okay, so let me give you the information.
Mm-hmm.
Recession starts if there's an inverted yield curve, which means it's the 2-year note against the 10-year note has a higher yield. The recession never starts when the 2-year yield is higher than the 10-year yield. The recession starts when it's going back to 0 or above 0. Now, that has been true about every recession of the last 60 years.
Mm-hmm.
People just don't study it. So right now, we're not in recession. The 2-year
Right.
still having a higher yield than a 10-year when it goes around the recession, and it has been in 100 cases. So can you say it's going to happen again? Well, is there anything better? No, you don't know anything better. So let's assume that. Nobody tells you that because nobody understands. People listen to them. They don't know what it means. What it means is the recession, high interest interest rates, then profits are going to tumble. So you have to pay attention, but it doesn't help. It's going to be 20%, 30%, 10%. So what are you going to do? Nothing.
Yeah. All right. Okay, I'll buy it. So the recessions, they decided to throw a recession, but nobody came, huh?
No, but they're not throwing. I don't believe that you can manipulate all that stuff.
Yeah. Yeah.
Otherwise, the cycle work wouldn't work.
Right.
But what we know is, again, once the 10 years is going to have a higher yield than a 2 years, then you're going to have a recession.
Mm-hmm. Okay. So when that happens, when the yield curve flips, then we know. What's the lag time for the recession, Charles? Between that?
Well, there's no the lag time is difficult. You just have to wait till the 10-year when you have to do your work, looking where the 10-year yield is going, where the 2 yield is going, and when it reverses, you have to anticipate. But especially if it goes back to zero, you have to be very careful. Now, if you look at our cycle work, we haven't the cycles actually predict when it's going to happen. So that's why we're cautious already in the market, because we have a tradable low soon in a few weeks on the 30-year yield and the 10-year yield. I think the whole thing is going to reverse. So then we have to pay attention.
So does that mean that the dollar is going higher as well? What's gonna be the outcome of the dollar?
Like the dollar at all time.
What's that? I'm sorry.
For the moment, with longer term, the sides are down in the dollar. So we're out of the dollar.
You're out of the dollar. Okay. So how low can the dollar go from where it is now?
That I don't have ready. In our next conversation, I'll be ready with that one. I mean, I will follow so many markets. I don't have everything ready in my head.
Yeah, it's a dollar's had quite a run over the past 10 years, you know?
Well, maybe, but if you look at the buying power, it totally collapsed.
Yeah, well, that's a different. I'm talking only relative to other currencies, which, you know, we're all on a sinking ship. It doesn't really matter, does it?
No, it doesn't matter. We're on sinking ship, and I think the BRICS situation is going to take over soon. I have very big clients in Brazil, the Brazilian real.
Yeah, so you think the BRICS really going to take over?
The Brazilian real has no reason. They're really going to take over because this real is so strong, and no reason for the real to be so strong. But it's part of the BRIC country, so people are already investing in the real and getting prepared.
Huh. Interesting. Interesting. Yeah. Well, you know, hey, no currency lasts forever, right?
No, and then we have the gold situation. One of the reasons why isn't gold going up? Maybe you remember, like 2 years ago, the European countries asked the United States to give them back gold they were holding.
Right.
That was strange. So I heard from very big clients why that is. This is why is that? Because they think that the United States is short on gold.
Mm-hmm.
They don't have the gold. They think the United States continues to push down the price.
Yeah.
Of gold in order to cover their short on gold. And it doesn't take off. So there are a lot of things going on that nobody can tell you. I would know that if I wouldn't have these bankers clients. I give you one more example. You know the story about Credit Suisse, right?
Yes.
Okay, so nobody knows really why Credit Suisse closed down and almost went into bankruptcy. The situation was this: they had big clients from the United States, and they were about to be sued by the United States. And they calculated it would be better to close the whole Credit Suisse than pay hundreds of billions to the United States. So that's why they closed down.
Really?
Inside information that nobody tells you. I don't think if the media know this. So there's a lot going on under the surface. So if you try to figure out why, we don't have enough context to know why.
No, the market knows everything, right?
No, there are people that know everything. Yeah.
Yeah. All right. So we're going to see gold. What's ahead for gold?
It is coming. It is coming. It's disappointing for a lot of people who played on the long side and the short side. But I have people every time it goes up, they buy and they lose a lot of money and then they get out again. It's coming later in the year. The bull market will start again.
Okay. All right. I'll buy that. Any other markets? What about oil, nat gas?
Well, longer term net gas is going higher again, and crude oil is also going higher again. You'll be surprised how high it can go again. And inflation is coming back. Cycles bottomed on the inflation, and they don't mention it yet. It's one of these days, the inflation numbers come out, and everybody's going to be in a crisis because nobody pays attention. And if you look at my cycle work, again, what you said is you can have a free trial, but you forgot to say is it's a free trial for 30 days, so you get it for free. So it's worthwhile seeing how these cycles look, even if you don't want to continue with it. You have an idea how the investors look, the knowledgeable investors look, and how to approach markets.
Yeah, highly recommended. Highly, highly recommended for sure. So, all right, food prices, wheat, and soybeans, and all that. What do we have to look forward to? If inflation's going up, it's going to take them as well, right? Corn.
Yeah, it's not. It's more gas, crude. The food prices for the next couple of weeks are actually the commodities: corn, wheat, soybeans are in a downtrend. They're going to continue down.
Interesting. All right. All right. And any other markets we should be looking at?
Well, we're still with the Bitcoin cycles not that good, and it's just trading about 29,000. We're totally out because of the cycle. If it closes below 28,000, we can have a big down move again. And all this expectation of the Bitcoin is not going to happen at the moment. But the major thing that we're watching is like, the interest rates.
Yeah.
And the stock market. It's also especially European stock markets and crude oil. We do a lot with the USO. That's a stock that follows the crude price for people who don't want to trade commodities. And we have UNG, that is ETF that follows natural gas, and it goes excellent.
All right. So,
by the way, if I may mention, I'm a bit proud of our track record. If you go to our website, you see our track record, and you'll be astonished what that looks like. Track record.
Yeah, I know you've got quite the track record for sure. So, all right. So we want to be very cautious about the market, and we want to really be looking at this BRICS currency, where it's going to head. Hey, question about China. I mean, I know it's in the news a lot. They're flooding and buildings collapsing right and left. What are your charts telling you about China?
The funny thing is China looks more deflationary than inflationary. Right. And some of the big clients that they have over there, they think it starts to be a big mess. It's getting out of control.
So meltdown. I mean, I know they're real estate. Hey, I remember like 5 years ago, you said, Kerry, go buy small apartments, vacation apartments, rent them out, condos, vacation homes. You still think that's a good thing to do?
No, because the institutions that work with me, they started selling them already a while ago. The cycle is still holding up for another 7-8 months, but then you really have to be out.
Yeah. All right. So housing's going to take a hit as well, huh? Yeah.
But the good thing is now, if you sell, you can get a 2-year note for 5%. So you can change, from getting rentals to 2-year note or even a 5-year note. So maybe 4.5%.
So you get paid to wait. So
that's a nice.
Yeah. And then you jump back in. All right. Well, go over to charlesnenner.com, get your 30-day free trial. You will be really happy you did. Charles, always appreciate your coming on, sharing your wisdom with us. If you got a question for Charles, myself, the email address is kl@kerrylutz.com. The link to Charles's site in the show notes to this interview on financialsurvivalnetwork.com. While you're there, sign up for your free newsletter. Charles, we'll talk to you again real soon. Thanks so much.
You're welcome. Bye-bye.